Welcome back, everybody. This is Raw Stocks, and we're going to take a look today at the price action and what happened on Tesla during market hours today. We're leading up to CPI data coming out tomorrow, and there was a lot of excitement in the market, a lot of movement in the market, considering the kind of breakout day that we had yesterday. So we're going to go ahead and dive into the charts here and see what's going on. So yesterday, we had the big breakout candle, right? Sunday, I released a video that said, if we break out of this liquidity zone, and I'll put it on the chart for you guys, right? We had liquidity built up in this wick. And on this video here on Sunday night was when I made it. Make it blue so you guys can see what I'm talking about. Right? I said if we go up, we could break this liquidity. We could hit this liquidity, right? We could potentially run up into it, just grab liquidity and drop off. But what ended up happening is that we just straight gapped it. We ran up, we opened above liquidity, which makes it so that all those institutional orders that are built up in that wick right here from August 4th, they don't get filled. It just jumped right over them, right? So from that point on, price just ran. It ran straight up. And we can take a look at where price went and potentially why price went there. So if you take a look at this candle here, right, we know that this is buy-side liquidity found in this candle, right? It's a black candle, but it's at the top of a move up. And so right there, liquidity sits here, right? Stop orders, stop losses sit in this candle before we made that move down. So anybody still holding on to that might have their stop loss sitting there. So the candle from Monday, again, gapped the liquidity from this candle, ran up into buy-side liquidity. Okay, went just a little bit above and ended up closing just right above. But that doesn't really make that much of a difference as far as where it closed. I guess it's worth mentioning that it did close above this candle high slightly. And the wick just left a little wick. Okay, so after that candle, you can say that this mission is done to take this liquidity in the buy side. But that also leaves you wondering, well, where's it going from there, right? So let's look at where some of the likely targets would have been before price action today. So we do have the gap open here, okay, at 279.38, give or take. And we have the gap close right around 291. So likely targets if we would have headed up, right, and act like we don't know what was going on today yet. This is as of yesterday. Likely targets would have been gap open. You could also consider the consequent encroachment of this gap, which is going to be around the 50%, or it is the 50% of the gap, which is going to be around 285. You call it the mean threshold of the gap. Consequent encroachment is what I call it. It's the 50% of any gap. That can include fair value gaps. That could include volume imbalances. That could include just straight price gaps in general. And so if you look at where price ran today, right, it opened low, but it ran up. And it ran up to, but didn't quite hit, gap open. Now, to me, that says this is all going to be unfinished business. The fact that we didn't quite get there and we ended up reversing before we actually hit the gap. You know, a lot of traders are probably saying, oh, we're going to the gap. We're going to the gap, right? And if we get into that gap, you know, are we looking to fill it tomorrow? Are we looking to fill it on CPI, right? We can get that rip up. And what happened is it reversed before we even hit the gap. So that leads me to believe that we're going to come back for this gap at some point in time, but it wasn't ready to take it on today. Now, it could be market manipulation, you say, and that's potential, right? Sometimes we see some different things happening prior to data drops. So it could have been a manipulation to move that tape down today, potentially to try to run it back up into the gap tomorrow. So we'll just have to see with whatever CPI releases. Something I want to note is that this wick right here, and I'll show you when we get down to lower time frames, right, is that we ran up to buy side liquidity. We opened low. This wick took all the stop or the stop losses that might have been short in this candle. Um, it went up and ran it. Any of these shorts got potentially stopped out, and then price rejected. It came back down, left a nice big wick, right? So inside that wick is institutional order flow that didn't get filled, right? So it's market orders. Institutions, when they're buying, cannot buy all at once, and so it's less about retail orders being stuck in this wick. It's more about institutional order flow being stuck in that wick, and so that will be a new liquidity area that we'll want to highlight and focus on later. I'm going to go ahead and take this one off, and I'll mark it there just so we know it's there as a liquidity zone. Okay, so we got it marked as liquidity zone. We could come back up to it anytime, but we know that there's orders sitting in that wick, right? But what we did see was that price ended up rejecting, came back down. Today's price close, it created a fair value gap from Friday's candle, right? We got candle wick, we got Monday's action, we got the low of today's wick. That created a new fair value gap. So much like this fair value gap here, right? Price ran up, it left the fair value gap in this wick. We came back down and chopped around and tested it. Ultimately, we broke out, right? So the same thing could happen here. We came down, right? This wick creates fair value gap. We could chop around inside this fair value gap and still leave it open and eventually run again back up into liquidity, back up into the gap fill. Could even go all the way up to the full buy side liquidity. We also have supply just sitting up there in an order block from the past. So any of those things are possible. But what we want to see for the bull case is that we want to see price come down or immediately reject it and run off of this fair value gap, or come in here, chop around, and then eventually buy some time, which would run up even further, right? Just building the energy, keeping this fair value gap open, ultimately to run higher. So that's kind of the bull case scenario. If you're leaning bullish, you want to see this fair value gap stay open, because we got this fair value gap open. We got this one that didn't get marked by the indicator, but it stayed open, right? The wicks do the damage. The body candle closes is what we're looking for. These candles all closed inside the fair value gap, never closing the fair value gap officially. Same thing can happen here. We come back down. We can even come as low as 256 and keeping that gap open and then shoot higher, right? So we're just building the energy for the bull case. If it's going to run up and close this gap, take buy side liquidity, run into the supply in the order block. And that order block is 302 to 315, right? So those are areas of interest. Those are things we're watching if the price does decide it wants to run higher. Now, the candle today tells us it's an inside day bearish candle. The wick, again, has liquidity in it. We chose not to make a run on to test the low of this candle body. So it's still valid that it was a nice big breakout candle, and it hasn't been tested yet. And what we could see, again, is we could see price start to come down. If it wants to go lower, what we can anticipate is that it's going to come into this fair value gap. And what we also can anticipate is that right here, it could potentially test this candle high and this order block here and see if it wants to hold that, right? It also, you notice, inside this order block is where that fair value gap low is. So again, seeing if it's going to test that, seeing how it's going to react to that. If it chooses to come down and close this fair value gap, what do we have below? We have another fair value gap that becomes magnetic, right? As price runs off of fair value gaps, when price runs off of order blocks, what happens is that it's like the opposite of magnetic, where it pushes price off and then it eventually becomes magnetic, where price falls back down to it and it's often drawn in. You can see with this fair value gap down here, I'll extend it out so you can see exactly what happened in this situation, right? And I'll turn it green so you guys can see it's a fair value gap. But what happened is that price set the fair value gap. It ran off of it aggressively, right? Never even coming back down to test it for a while. I mean, that was like, I don't know, June 6th all the way to July 19th. So over a month and a half almost, right? Ran off of it, eventually rejected, came back down, tested the fair value gap. So magnetic, as it pulls it in, chose to keep it open and reject off of it. So when it did this would be a good indicator, using that fair value gap, that you could enter long inside this fair value gap, and you could set your stop loss probably maybe even like right down here in this fair value gap, or even just right below where the fair value gap closes. That'd be a pretty low risk entry inside this fair value gap to try to go long. I didn't personally catch that one, but those are the kind of entries you like. Fair value gaps leave awesome entries, especially if they're coming off of reversals, or if price is being drawn back down to it to try to catch a bounce off of the support of the fair value gap, even if eventually it comes back down and closes it. So back to where we were, right? So today we had the bearish candle, but it's an inside day candle, so it doesn't tell us a whole lot, except for that there's liquidity left in the wick, and we have CPI coming out tomorrow. Certainly CPI could send this either direction, and we won't know until the data is released and trading starts. We can look to, QQQ or futures, NASDAQ futures. We can look to ES for futures, because they're going to be live trading while we're waiting for the market to open right at data drop. So you can look for clues there to see how price wants to react to that data, and then see if price wants to continue or if it wants to reverse when market opens. It can go either way. Sometimes if the price moves, up with the data, that it could just be a continuation and it could just run all day, right? Same thing to the downside. If price decides that they're going to drop the tape and run it down, it certainly could just continue down all day. It also could reverse. So we'll be looking for clues in the lower time frames during live trading tomorrow. I'm going to go down to some lower time frames and just see if we can find some other things that are going on. I'm going to pulse down to the 1 hour time frame and see what kind of indicators are showing here. So nothing really sticks out specifically. It looks like fairly balanced price ranges, and we do have an unbalanced change of character on the 1 hour time frame, and that's going to be up at 285. So worth noting that if we do head up into that gap, we could be looking at 285.34, which is pretty close to that consequent encroachment that I was talking about. The change of character, that unbalanced range is at 283.47. That consequent encroachment is at 285 and some change. So in the general range, two price targets that we could look at if we were heading higher, that we would be looking at headed into. Other than that, on the 1 hour, everything looks fairly balanced. So there's nothing that's a clear indicator. You see this fair value gap, which is partially inside this fair value gap that was on the daily. You can see it's here. Also stayed open through this kind of chop and eventually ran up, leaving another fair value gap here, which is outside of this one. And so we could be looking at the 1 hour to see, if price falls down into this fair value gap, continuing to leave this one open, we could see it run back off of it. So just a couple different things on the 1 hour chart that we could be paying attention to. Again, downside is just going to be targeting fair value gap close, from the daily chart, fair value gap down here, which also left a price imbalance right here. And so we'd see if price wants to run that low. That's not going to happen tomorrow. This is down in the 225 to 216. So that don't anticipate that CPI is going to send it like that, but certainly things we want to look at. We also got the previous day low at 260.90. We got the previous week high at 258.05. We're almost at the previous month high, back down to it. All right, we got a previous week low at 243.36. These are all things that are built into the indicator, but other prices to be watching as well. And so just pay attention to those, because often price wants to test important areas. All of those lines are important areas. And so when we start heading down, even if you don't have any levels indicated on your chart manually, you can use these previous day highs and lows to gauge where price is likely to go. We'll go ahead and pull it down to the 15-minute chart, see if there's anything on there that's any different than what we've already seen. So what I see is that we have a break of structure right here that hasn't been tested yet. So we're going to go ahead and mark that. Right, so what happens is that when price, in this case, gapped, but let's say it didn't gap and it just ran, it broke structure right here where we had a previous peak. Whether price runs up or it gaps, it broke that structure right there. And with the unbalanced price range theory, that price will basically come back down to these break of structures or change of characters if they haven't been tested yet. They don't offer really support or resistance necessarily. Price certainly can run right through it, but it's something that I use a lot to look for balanced price ranges. So what I believe is that the market algorithm is built to balance price. And when you have moves like this where price breaks, it's kind of a constant balance. Right here, you got balanced price range, right? So in these chop zones, price is kind of constantly rebalancing. But when you have these giant runs, price is inefficiently delivered, in this case to the upside, where the market algorithm does not have time to come back down and balance the range immediately. So what happens is that we get to a certain level, certain point, price comes back down. In this case, didn't quite make the change of character, but attempted to balance the price range, got stuck in this fair value gap. But again, if you're using these change of characters, break of structures as a gauge to where price might go, you can really catch some nice moves and some little swings, and really make a nice profit off of those positions. So in this case, again, we have a unbalanced price range down here at 257.85, and we have this move here that broke structure, bearish break of structure. And you did see the price just it broke and came right back up, but this whole price range has not necessarily been balanced. So we could anticipate that we could either pop right back up to it and balance the price range. Again, that would head us into that liquidity that's built up in that daily wick. Or we could see price come back down and balance maybe potentially this range, ultimately coming back up to balance this range we were just talking about. So that's where a lot of you guys will see me and hear me talk about, a little different one-day swing positions. A lot of times it's just looking for those balanced price ranges to play out. So that's a pretty important one right there that I'm focusing on as we look to see if price moves down tomorrow with CPI. We got to close at 267, so to come back down to 258, that'd be a pretty big move. But it's not impossible, and we could be heading in that direction and then finish it off later in the week. And so we'll just have to see what happens. Why don't you guys drop a comment in the chat and see? Let me know where you guys think price is going tomorrow with the CPI data. Let me know if you guys think it's going to be hot. Let me know if you guys think it's going to be good. Sometimes Good news is bad news, right? Sometimes bad news is good news. So just drop a comment and tell me where you think we're headed. I'm going to drop us down to 5 minute, and this will be the last one we take a look at. So again, we have some of our levels marked off previously. We have another break of structure here, although we have this one, so we could add both of them. They're really generally like within the same, I don't know, $1.50 price range, so it's not significant, but worth marking out. These ranges have all been balanced here, so there's nothing to indicate that we necessarily would go lower, at least on the lower time frame. This break of structure here has already been rebalanced, and I've had these previously marked out. This change of character broke, came back down. This price range I would consider balanced because you have kind of a lot of chop in there. And then we again ran back up. So all of this balanced price range. This change of character down here is actually a fake out because we didn't continue to go down. So price came down. Indicator said character was changed because we got lower than this low right here, but it immediately reversed. It did leave a nice order block, so sometimes we can focus on taking those order blocks. You can see on this 5 minute chart, we have a couple bullish order blocks in play right now. Doesn't mean they're going to hold. A lot of times you'll see price run off an order block, come back to. Sometimes you'll get the bounce in the order block. Sometimes it'll pull through it. You got two order blocks here that are close together. Sometimes we'll just see it drop right back down to the next order block. So knowing that we do have some levels down here that we're targeting, we could look at pulling down into this order block and rejecting. If we start getting this low down in the 240s, you'll probably see a bounce somewhere in this fair value gap, in this order block, back up. There'll be some break of structures or change of characters in here, might rebalance and could potentially come even further down. So we'll just have to see what happens. Again, thanks for listening, guys. Drop a comment if you like what you hear or you want to let me know where you think price is going. Good luck tomorrow. CPI can be a very stressful time, but it also can provide a lot of profit if the trade goes in your direction. So again, don't forget to like and subscribe. Thanks for listening, guys. I'll see you next time.